Assalamualaikum and a very good evening to Madam Mariam and my fellow friends. For today's presentation, we will analyze MFRS 8 and MFRS 134 using two companies, which are MISC Berhad and Astro Malaysia Holding Berhad. MISC Berhad is a Malaysian multinational company which involved in LNG petroleum shipping, offshore services, and marine engineering. Its global operation make it suitable for studying segment reporting and interim disclosure in a large, diversified organization. Meanwhile, Astro Malaysia Holding Berhad is a country-leading media and entertainment provider offering pay television, radio, digital content, and broadband services. Since Astro primarily operates in Malaysia, it provides a good comparison for how standards apply in domestic service-based business. By examining both companies, we can see how MFRS 8 and MFRS 134 are applied across different industry and business environment.
Under MFRS 8, an operating segment is a component of an entity that earns revenue and incurs expenses, including from internal transactions, and whose results are regularly reviewed by the chief operating decision maker for performance and resource allocation. To be reportable, a segment must meet one of the 10% quantitative thresholds based on revenue, profit, or assets. Segments below these thresholds are combined as all other segments. Additionally, the total external revenue of reported segments must make up at least 75% of the entity's total external revenue.
The Chief Operating Decision Maker, or CODM, is defined under MFRS 8. This is the person or group responsible for deciding how resources are allocated across different business segments and for evaluating their performance. Depending on the company, the CODM can be the CEO, the group CEO, the board of directors, or even an executive committee. They rely on internal reports to make this decision. The CODM plays an important role in ensuring company resources are used effectively. They identify which segments are performing well and which need improvement. Most importantly, the CODM connects financial performance with strategic business decisions. For example, which is MISC Berhad, the CODM here is the board of directors together with the group CEO. They review the performance of each segment and make key decisions regarding investment, capital allocation, and operations. For Astro Malaysia, the group CEO and the board of directors function as the CODM. They evaluate each segment mainly based on profit before tax, and this helps guide the company's business strategy and directions. Hence, the CODM is essential in guiding company performance and strategy. Both MISC and Astro clearly show how their top management teams act as the CODM to evaluate segment results and drive the business forward.
Segmental reporting under MFRS 8 is a method of presenting financial results by dividing a company's performance into separate parts. MFRS 8 uses the management approach, meaning segments are reported the same way management monitors them internally. There are two types of segment reporting. First, business segment, based on what the company does. Second, geographical segment, based on where the company operates. Next, let's look at example from two mentioned companies that we have chose. For business segment, MISC divided its operation into gas solution, petroleum shipping, offshore, heavy engineering, and others. Meanwhile, for Astro, report television, radio, and others. The television segment is the biggest contributor for Astro. For geographical segments, MISC reports revenue from Asia, the Middle East, Europe, Africa, and the Americas because it operates internationally. But for Astro, geographical reporting is not relevant because almost all of the business is in Malaysia. That's why Astro only includes business segment in their report. MFRS 8's purpose is to show segment information the same way management see it. For MISC, both business and geographical segment reporting are necessary because the company has diverse business unit and operates globally. Meanwhile, for Astro, only business segment reporting makes sense since it is mainly a domestic company. Overall, segment reporting helps users such as investors and analysts understand the performance series and how resources are allocated across the business.
Segmental reporting under MFRS 8 is useful because it shows profit and loss for each business unit. This helps users identify which segments are performing well and which need attention. For example, Astro 2025 results show that the television segment is the main profit contributor, while the radio segment is making loss. MISC Petroleum brings the most revenue, gas asset is highly profitable, and marine and heavy engineering has very low profits, which signals higher risk. Overall segmental reporting provide a clearer picture of performance and risk, helping investor and manager make better decisions. FAR 134 Interim Financial Reporting is a standard designed to provide timely and relevant financial information between annual reporting periods. It requires entity to present condensed financial statements supported by explanatory notes that highlight significant events during the interim periods. The standard also mandates the use of consistent accounting policy to ensure comparability with annual financial statements. Overall, MFRS 134 enhance transparency and support users in making informed decisions by offering reliable updates on an entity, financial performance, and position throughout the years.
Significant events during an interim period can materially affect an entity's financial position and should be disclosed under MFRS 134. Our first selected company is Astro Malaysia Holdings Berhad. Firstly, the group recorded a net profit of 46.94 million ringgit in the quarter ended 31st October 2024, recovering from a net loss of 47.05 million ringgit in the same quarter last year. The turnover was largely due to favorable unrealized foreign exchange, gains on exposed lease liabilities, and lower intangible asset amortization despite lower revenue. The second one is the revenue for the same quarter decreased by around 9.5% to 749.7 million, primarily due to decrease in subscription revenue and advertising income. Next selected company is MISC Berhad. The group revenue for fourth quarter 31st December 2024 was 3,306.6 million ringgit, a decline of 22.7% from fourth quarter in year 2023 amounted 4,278.3 million. This was mainly due to lower recognition of revenue from a conversion project named Floating Production Storage and Offloading Unit. Next significant events for MISC Berhad is the group recorded a net loss attributable to equity holders of 446.2 million ringgit in fourth quarter year 2024 compared to a profit of 627.3 million ringgit in fourth quarter year 2023. The loss was driven by the weaker operating profit and increased impairments.
Next, the identification of current and comparative reporting periods for Astro Malaysia Holdings Berhad and MISC Berhad based on their quarterly interim reports. For Astro, it used a financial year beginning on 1 February and ending on 31st January. Each quarter covers a consistent 3-month period. For first quarter, the SOFP compares 30th April 2024 to 30th April 2023. The SOPL compares February 2024 until April 2024 with February 2023 until April 2023. The statement of cash flow and statement of changes in equity follow the same 3-month year-to-date structure. For the second quarter, it compares financial performance from May to July. The current reporting date is 31st July 2024, while the comparative is 31st July 2023. Year-to-date reporting covers February to July. For the third quarter, it's covering August to October. The SOFP dates are 30th October 2024 and 30th October 2023. The year-to-date comparison covers February to October. For the fourth quarter, the SOFP reporting date is 31st January 2025 with a comparative of 31st January 2024. The full year-to-date comparison is February 2024 to January 2025 versus February 2023 to January 2024. MISC Berhad used a traditional financial year from 1 January to 31st December. Its quarters follow the standard calendar year cycle. For first quarters, the period is January to March. The SOFP compares 31st March 2024 with 31st March 2023. The SOPL and year-to-date statement compares the same 3-month periods. For the second quarters, April to June, and the current reporting date is 30 June 2024 and the comparative is 30 June 2023. The year-to-date covers January to June. The third quarter, it covers July to September. The SOFP compares 30 September 2024 and 30 September 2023. Year-to-date is January to September. For the fourth quarter, October to December, the reporting dates are 31st December 2024 and comparative is 31st December 2023. Year-to-date statement covers the full calendar year. In summary, the main difference between the two companies is the financial year they follow. Astro used February to January, while MISC follows a normal calendar years. However, both apply the same MFRS 134 principles.